Hello, this is the Chartprofit video, approaching 2.5 hours into the trading day on Friday, 19th of February. As usual, first of all, we look at the graphic here from the pre-open showing the S&P E-mini. If you remember, last Friday we had some aggressive buying here at the end of the week. Quite a reversal off that Thursday low here. Most important level on this chart is 1870, that's the point of control. And this week on Tuesday, again we had aggressive buying, but this week we've had all these value areas so far printed above that level. That's usually a good sign. And the other pretty significant thing that we've seen this week really was in the sentiment here. I'm looking at the RIDEX assets ratio, and as I said, pre-open on Thursday actually, that my version of the ratio fell to its lowest level since July 2013. And this is what the chart looks like with the ratio at the bottom here, and the October low has now been exceeded and we're down to the lowest ratio since that point, 2013. The interesting thing is, as the market has rallied quite violently here off that low, the ratio has actually fallen. Now if we look at the bull fund assets that I follow in isolation, you can see we're at a pretty low level. An extremely low level actually, and you can see that usually corresponds, or has done historically, to these low points in the market after a correction. In other words, bull fund assets down here indicating extreme levels of pessimism, and from a contrarian viewpoint that's usually pretty good for the market. So we have seen this pretty violent spike here, but you can see just over the past few days not been much movement in the bull funds, but not so in the bear funds. They've actually spiked much higher and done so over the last few days, as I said, as the markets come higher. So this would indicate this ratio at the highest since November 2011. Sorry, this, not the ratio, the assets, the bear assets at their highest since November 2011. And with the spike here, it looks like the retail traders are taking this rally as an opportunity to not just get out, but to get short the market. Again, from a contrarian viewpoint, that's usually good news. So let's carry on with the sentiment indicators here. This is the public poll from AAII. It's actually more bulls percent this week, higher at 27.6. That was up quite strongly from 19.2 previous week. Just remembering that 5 weeks ago the bulls percent fell to 17.9, which was the lowest reading since April 2005. So that was an extreme reading 5 weeks ago, which corresponded to this point on the chart here. Bears percent this week was lower at 37.8, down from 48.7 the previous week, but that was actually the highest since April 2013. And we'll look now at the investors' intelligence poll, the newsletter writers. This shows us that the bulls percentage this week was higher at 26.5, but only up a couple of points from the previous week's 24.7, and that was the lowest since 2008. So 1 week ago here, the bulls percentage was the lowest since 2008. This week, the bears percentage was actually slightly higher at 39.8, and that's the highest bears percentage since October 2011. And if we look at the black line here, that's a 4-week moving average of the net, the bulls minus the bears, and that has actually reached its lowest level since 2009 this week. So you can see there's a lot of pessimism at the moment. We're looking at the exposure index, which measures current equity exposure of active money managers. This up here, 0% would be all cash, 100% fully invested. Currently, they're at 41.05 this week, higher this week, but just 2 weeks ago the number reached 22.41. That was the lowest since October. Historically, anything below this line here usually indicates extreme pessimism. Okay, let's return to the pre-open, the E-mini here. As I mentioned, the most important level is 1870, and as long as we hold that level, that important support, the E-mini remains in a much stronger price location than it was earlier in the month over here. This is the live chart for the E-mini. You can see the 1870 level here, and that's the level in the longer term that we want to see hold. Would not want to see price printing time below that level here. That would be, I think, really bearish and indicate lower again. The first resistance I can really find on this chart is 1956.90, which is here. That's the halfway point off the high to the low. Price back above that point would be a really positive step. Look at the equivalent levels on the spider. 187.20 is the major level, the major support. We have a minor support here at 189.60. That's just the 3-month, and then the halfway point somewhat higher here. Here's the Russell 2000 ETF, IWM. The big point of control is much higher. So we'll focus going into next week on this level here at 103.50. That's the 3-month time support resistance. And we'll look for hopefully some time printed above this level. It's struggling a little at the moment with this resistance, but we would hope that we can see some time printed above that. That would be a mildly bullish indication. And the most relatively strong chart, I think, is the diamonds at the moment. Just with the price action we've seen this week, we're actually oscillating around 164.25, which is now most definitely back to being the major level, major point of control. So again, price above that would be a real positive. We've got resistance just overhead at 167, just here, which is the halfway point from the high to the low. So that's a really important resistance level. But the time this week at that point makes this a really important level going into next week. Now currently we're printing just below that level, so let's look for and hope for some price above there next week. And if we look at the Qs, that's an interesting chart. The major has actually migrated to 101.30, so that makes that a really interesting level. So again, let's look for price to print some time above that level going into next week. We have support a little lower at the halfway point from here to here, just above 100. But we've seen that shift, and we'll see a shift in migration in a point of control very often before the market makes a directional move. And here you can see we're printing right at that level, so time above would be a really good indication next week. Hopefully we don't see the market fail here at this level. Okay, this is the UK FTSE 100 chart, particularly interesting because this 58.70 major point of control level that we've been following, obviously the price action here and location was extremely weak, but we've actually recovered back above that level, and again it would be a real positive to see a higher low above that level. But it has been recovered. Price back down here would not be good. You can see on a number of charts there's the possibility for some optimism on our part that we can see these charts move into a stronger price location here and there going into next week. I've moved the major on the DAX, just simply sampling the time on different time frames from the 30-minute chart going way back. 96.65 is the major, and this will be resistance on this chart. So this will be one to watch going into next week. For Europe, we want to see some time above here. So this chart is definitely still in a weak price location. Now, I mentioned in the pre-open midweek that the momentum, price momentum on the major stock index ETFs and the breadth had improved. So we're looking here at the current live chart for the spider. Just one thing that hits you straight away is this kind of potentially a double bottom here, or certainly they made their lows about the same point, while the price oscillator above here, momentum indicator, has seen a higher low here, and that's what we call positive divergence. So that's encouraging, and we see that the price oscillator is slowly moving higher. Now it's still negative, I want to see it up here somewhere, but we could see further improvement in this indicator. And I mentioned improvement in price momentum and breadth that we look at. So this is the daily breadth chart for New York through Thursday, and you can see that the percentage stocks in my New York list greater than their 50-day moving average is rising. I like to see that number above 50. This indicator is just in the middle here, which is the net new highs 25. Black line is the 5-day moving average. That's above 0. So we give that a positive, and at the moment this one a negative. And so on the pulse chart we get a neutral here. Now that's certainly an improvement over the negative here, but as you can see from early December, this breadth line in the middle here has not been green, which would be positive. So that would be a further improvement, and that would need a pickup in the numbers indicating the number of stocks greater than their 50-day moving average. So we watch that each day, and again we'll hope that picks up. And here's the price oscillator at the bottom. Okay, we'll look at the supporting charts now. Bonds, we look at IEF, first of all the 7 to 10 ETF. I said it held the major support at 105 following the big decline from October, and it's rallied strongly. On Thursday last week we had this spike up here to a new high, but we've sold off from there, and it's been a tremendous rally from the point that we hit the major support here. And if you remember, we built this trading range between these two important levels, the 18-month and that one, and I said at the time a convincing breakout one way or the other would be the next directional move. So we've had a really strong directional move. We could simply mark the halfway point from here to here, which will be in here, and that will give us a clue in the short term about the direction of this fund. If we see a lower high and we see it turn over like this, that will probably be good for equities. Now this is a really interesting chart. We're looking at GLD, the gold shares ETF, and 115.50 this week became the major point of control on this chart. It was higher, it was up here somewhere. It's migrated lower just from this price action in here. So this is now a really important level to follow. It could well be the chart is right now carving out a higher low here. That would be very bullish. Price back underneath here would be a negative for this chart, especially as this migration has happened. So we see, I mentioned it earlier, migration of a point of control or major time support, and as we know, that will often happen before the next directional move. And if we just zoom back on the chart, although we've had a very strong rally off the low, doesn't really amount to much on the chart. This 115.50 level is now really important. You can see historically it's been support over here. As I said, we're now printing time above that level, and we have to say chart is overbought, but currently this is strong price location. Looking here actually at the oil futures, and as a guide, still remains really volatile. As a guide, looking at this halfway point here, and we're printing back below it here. So that's weaker price location. Coming up off this low, and I'm literally talking really short term, as you can see on this daily chart. This is the halfway point off the recent low, which just tested this low here. So in the really short term, I'd really want to see this level hold. We're printed down to it today. I'll just be something to watch for the direction of equities. Too much time spent below this level would suggest a retest. I finally want to look at the Forex charts. This is the dollar index actually to start with. Just to recap, we tested the previous March high over here, and that was very obviously rejected, and we've sold back down to 95.22, which is the 12-month point of control, and provided really nice support here, and we've now recovered back above this halfway point. The dollar starts moving higher from here. It's in a strong price location if it can hold that halfway point. Price back below this level here, the 12-month, would suggest lower. So right now, as I record this, we're in a pretty strong price location, weaker on the day, but looking better than it did a week ago. So let's see if we can get some clues from other charts here. We're looking at the Australian dollar. And I'm looking at the levels as they were a week ago currently. We can see the 12-month at spot 71.88. Okay, so the first thing that's happened is that level has fallen to spot 71. And that's just happened in the last few days over here. And you're interested to note that the minor half range from this point to this point equates to that level. But again, you can also see on the chart this level up here, that's the 2-year point of control. That's where this chart has spent most time over the last 2 years. But I do know that a little more time here would bring that level down to here. Wouldn't take much time at all. That would be really interesting. Australian dollar has had a good chance, I think, from, well, really looking at the distribution pattern. I thought that we may have seen it rally. It's been very slow to do that. It likes this level. That's possibly not a bullish indication, so I'm thinking possibility of more time in here. It's getting really tedious, this chart just oscillating around this level for a good few months. But if this falls, that could be the trigger for a directional move. We don't know which way that will be, and we will look to see where price sits relative to that level after that happens, if it does happen. But my suggestion is that if that 2-year falls and then we see time underneath, we'll see a retest of here and the dollar index higher. As we know, a big component of the dollar index is the Euro FX chart. From the dollar point of view, we're looking here at that chart. There's 3 reasonably important levels. The first one, which is the half range off that low to that high, comes in here, the dotted line, and we're currently sitting right on that at the moment. So we're seeing the possibility of a lower high off that halfway point, and that would mean, if that's going to be support, that we'd see a lower high there, and then we'd see the chart rally. I would want to see it rally back above this level, which is 112.41. That's the major half range that we've been following, and actually a higher low above here would be really bullish. Again, from inspecting the price distribution, there are controlling prices that could migrate here if we spend more time printing around these levels. I'll let you know if and when that happens. So price above here puts it in a really strong position. Price below this 12-month down here, this is the 12-month, this red line, which is 1.0925. So price down here below that point of control would suggest a retest of that low. Finally, the pound dollar, have a level here, 144.08, which is the 3-month. We're currently below that in a weak price location, printing slightly lower than that. And I do know, again, time here going into next week, and this minor level could drop. That may be the trigger for lower prices. So I think there's some interesting possibilities for these charts and therefore the dollar. So I should be following those going into next week. I will conclude right there. Wish you a good weekend and thank you for watching.